Good morning, friends. Today I am going to talk about accounting equation. Accounting equation is based on dual aspect concept of accounting. Accordingly, assets of a business are always equal to total of its liabilities and capital. It is known as owner's equity. So, asset is equal to equities. So, accounting equation is equal to assets is equal to liabilities plus capital. Assets are the economic resources owned by a business. Liabilities, the financial obligations or debts of a business. Capital is owner's claim on the assets of a business. So what is accounting equation? Assets is always equal to liabilities plus capital. So assets is equal to liabilities plus capital. Then capital is equal to assets minus liabilities. Liability is equal to assets minus capital. Then assets minus liability minus capital is 0. The accounting equation always depicts the fundamental relationship among the components of the balance sheet. So it is also called as balance sheet equation. As the name suggests, the balance sheet is a statement of assets, liabilities and capital. For example, Rohit started business with a capital of rupees 5 lakh. From the accounting point of view, the resources of this business entity is in the form of cash, that is 5 lakh. Sources of this business entity is the contribution by Rohit. It is proprietor or owner, rupees 5 lakh as capital. If we put this information in the form of equality of resources and sources, the picture would be emerged somewhat as follows. Liabilities, it will come capital 5 lakhs and assets, it will come cash in hand 5 lakhs. So in the above balance sheet, the total assets are equal to the liabilities of the business. Let us check another example. Opened a bank account in State Bank of India with an amount of rupees 4,80,000. So before doing accounting equation, we have to analyze the transaction. Okay, in this transaction, the owner opened a bank account in the State Bank of India with an amount of rupees 4,80,000. So in this transaction, cash at bank, one asset is increasing and also in our business when cash is there, that cash is decreasing. That means cash is an asset is decreasing by 4,80,000. Next one, bought furniture for rupees 60,000 and check was issued on the same day. Matlab, what are the two aspects of this transaction? Furniture and when the check is issued, it will comes under bank. Okay, so the analysis of transaction. Furniture is an asset, it is increasing and decreasing the bank balance. So bank is considered as an asset, so it is decreasing. That means for every transaction there will be two. In some transaction there will be three aspects will be there. So we have to see that which is coming under assets or liabilities. Okay, the next example, bought plant and machinery for the business for rupees 1,25,000 and an advance of rupees 10,000 in cash is paid to Messrs. Ramji Lal. So in this transaction, bought matlab purchased plant and machinery for the business for rupees 1,25,000. That means plant and machinery asset is increased. How much? 1,25,000. So we paid only 10,000 rupees in cash. Okay, so cash is decreased by 10,000. So cash is an asset, asset decreased. Then and remaining how much? 1,15,000 is we has to pay. Matlab the business has to pay 1,15,000. That means it is increases the liability. किसको पे करना है? Messrs. Ramji Lal. So Messrs. Ramji Lal is a creditor. How much? 1,15,000. Next transaction, goods are purchased from Messrs. Sumit Traders for rupees 55,000. Yes, in this transaction we have to see that what are the two aspects. Goods purchased. When goods purchased, goods is considered as stock, so assets increased. In this question, it is not given, for cash is not given, so it is a credit transaction. So measures Sumit Trader is a creditor, so liability increased. So liability 55,000 and asset increased 55,000. Okay, then next transaction, goods are costing rupees 25,000, sold to Rajani Enterprises for rupees 35,000. Yeah, in this transaction, see, goods costing rupees 25,000. That means the actual value of stock is 25,000, sold to Rajani Enterprises. Rajani Enterprises, when the firm is sold goods to any other entities, that entities, if the payment is not made, they are known as debtors. So goods is matlab stock is reduced by 25,000, so assets reduced. Another asset created for how much? 35,000. Why? 25,000 value goods are sold for rupees 35,000. So the profit is 10,000. That profit will be added along with capital. So in accounting equation, always the assets is equal to liabilities plus capital. These are the rules for recording accounting equation. Just I will tell some rules. Okay, when started business with cash, so two aspects will be there, cash and capital. When business is started with capital, cash increases, that means asset increases, and capital increases, it will come in liabilities and capital. Any assets purchased for cash as well as credit, if it is assets purchased for cash, then cash will reduce and asset will increase. There is no effect in liabilities and capital. Suppose if the assets purchased on credit, then assets will increase and one more liability also will increase. Goods purchased for cash or credit. If it is purchased for cash, that means asset will reduce, cash will increase. Suppose if goods purchased on credit, stock will increase and liability also will increase. Their liability is credited. Sale of goods. Sale of goods is if it is goods sold for cash, then cash stock will minus. If it is sold on profit will be capital. If credit, then goods will minus other assets and profit will automatically be okay. Then any expenses paid, goes depreciation, okay, minus from the capital, then it will be increase over the capital, so it will be added along with the capital. The actual effect will be null effect. These are the main things you have to see at the time of preparing accounting equation. So once again, accounting equation is equal to assets is equal to capital plus liability. So assets means the resources of the business. Liabilities and capitals is known as, liabilities means the business has some obligation to pay some amounts in future. Then capital, the amount contributed by the owner into the business, but the business has the responsibility to repay the capital whenever the proprietor or owner is demanding. So always asset is equal to liabilities plus capital. It is known as, capital is known as owner's equity. Another name of capital is owner's equity. Capital plus liabilities is known as equity. Capital plus liabilities is known as equity. So accounting equation is very important. Asset is equal to liabilities plus capital. Liabilities is equal to assets minus capital, and capital is equal to assets minus liabilities. Okay, thank you.